Welcome back, D-traders. Now let's discuss the recent surge in volatility on Forex, a rally of oil prices, commodity wars, and the new arguments for a looming recession in the Eurozone. Markets in the United States and Canada are closed today for the federal holiday, Labor Day. Nevertheless, we can evaluate market sentiment and prospects for the week ahead. Despite the early rally, Wall Street indexes closed with the losses on a Friday. The Dow Jones went 1.07% down, and the Nasdaq closed 1.31%. The S&P shed 1.07% to close at 3,924 points. Today, trading floors are not running, but futures on the benchmark indexes are trading mixed. The S&P500 is expected to trade in the intraday corridor between 3,980 and 3,940 points. Wall Street indexes declined on a late Friday as investors were digesting the U.S. nonfarm payrolls for August and the new headwinds due to the energy crisis in Europe. According to the government employment data, the U.S. economy added 315,000 jobs last month, roughly in line with the expectations. At the same time, the jobless rate climbed to 3.7% for the first time since February, having surpassed the consensus of 3.5%. Despite the decent employment growth, investors' optimism was dampened by the news from Europe on a Friday night. Russian energy giant Gazprom announced that reopening of the Nord Stream pipeline would be suspended indefinitely. The new heartbringer of the brewing global uncertainty negated earlier gains of the stock indexes and pushed them down. Following another selling on Wall Street, the benchmark indexes completed a three-week losing streak. The Dow Jones lost 3.3% for the week, and the Nasdaq tumbled 4.6%. The S&P 500 closed 3.6% down. While U.S. markets are shut for the public holiday, investors are evaluating the economic conditions in the European Union. Investors are discouraged by that Germany's services sector shrunk in August for the second month in a row. Besides, the French services sector revealed minor growth. The revised composite PMI viewed by the S&P Global as a barometer of economic health sank in Europe to 48.9 in August, the lowest level in 18 months, from a 49.9 in July, below the flash estimate of 49.2. The EU services PMI dropped to 49.8 from a 51.2, also below the flash estimate of 50.2. It dipped below the threshold level of 50 for the first time since March 2021. Analysts say such dismal data indicates that the Eurozone is entering a recession earlier than expected. Experts foresee a significant economic downturn as early as in the third quarter. Investors will be able to judge on the business activity in the United States on a Tuesday. Besides, investors are alert to experts and imports data, the forecast for the energy market, and the series of speeches by Fed's policymakers, including Jerome Powell. Meanwhile, the currency market is gyrating today. The US dollar index has risen by 0.46% intraday and conquered a new 10-year peak at 110.04. The index has slipped to 209.80 by the moment of recording this video, and it's likely to trade in the intraday corridor between 109.20 and 110.10. The escalation of the energy crisis in Europe today is the catalyst for gyrations in the currency market. Russia announced that the gas flow via the pipeline is suspended indefinitely. The shutdown of the key gas pipeline increases the risks of a recession. In this context, the euro plummeted to 0.9976 against the US dollar in early European trade, the weakest level since 2002. And later on, the euro could recover above 99 cents. All in all, the euro has tumbled almost 13% since the beginning of the year. Apart from the euro, the dollar is holding the upper hand of the pound sterling, which is now at the lowest since 1985. The British pound is also weighed down by the domestic energy crisis and the political jitters in the UK. On a Monday, the sterling dipped 0.12% to 1.1500 versus the greenback. Then the pound has lost more than 15% since early January. In contrast, the US dollar is benefiting from global headwinds and uncertainty. Aggressive monetary tightening assured investors to flock to dollar-denominated assets. As a result, the US dollar has gained almost 15% versus its sixth major rival since early 2022. The greenback is setting the tone in the USD CAD pair. The trading instrument is creeping higher within the intraday corridor between 1.3080 and 1.3160. The loonie found some support from oil prices, and the crude oil is developing a rapid rally today. Following the OPEC summit, oil prices have climbed 4%. OPEC and its allies, including Russia, agreed on Monday on a modest cuts in oil output to sustain oil prices. Major oil producers are going to cut the output by 100,000 barrels per day. That represents just 0.1% of the global demand in October, wherever oil exporters decided to assemble any time until the next summit slated for October 5. And this decision maintains the status quo as OPEC has been monitoring sharp price swings caused by lots of factors. Brent crude fell to $95 a barrel from $120 in June. Recently, Russia stated that it would halt the oil supplies to the countries which advocate for the idea of a price caps of Russian petroleum products. And Brent crude gained 3.66% to trade at $96.42 a barrel, and WTI futures climbed 3.34%. Thus, the loonie is showing resilience to the US dollar. As for the crypto market, cryptocurrencies are trading mixed and sluggishly today. Ethereum added 0.23%, Bitcoin shed 0.74%, and found support at 19,800. The crypto is trading in the opposite correlation to the US dollar index. The token is drifting modestly, reflecting pessimism and a risk aversion. The flagship crypto is heading for $19,500. If this level is passed, the crypto will move lower to $19,200. Otherwise, the token will try to recover to $20,000 and higher. Make profits with the InstaForex and see you online tomorrow.